All right, good morning, everybody, and welcome to the Bookmap All Markets webinar. This is Bruce at Bookmap, and we're going to go through order flow live analysis here, looking at whatever instruments you want to look at in any market types. So crypto, futures, and stocks. General disclosure, all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. We're just going to jump right in and take a look at what's happening here in the ES. If you guys want to take a look at something else, good morning, trading for a living, let me know. All right, so we've had some really interesting moves in my opinion here that here we are off to the upside yet again, and the data on Friday was giving us insight that the Fed will likely be raising rates, but here we are moving to the upside. A beautiful opening here at 9:30. You can see that, tricky opening actually, really back and forth in here, no momentum whatsoever until just now, as you guys can see the buyers coming in here. This is a pretty typical a breakout here, this is what you see a lot of times, and I want to go through it kind of step by step in here. Now, there's some other factors that are kind of missing here, but let's just start off with a setup in here, talking about a breakout trade. And you can see that the market is really wound up in here. Okay, so let me try to simplify this here. All right, so we're going to take some of the elements off the chart here to begin with. We'll take the heat map off the chart. We'll take the volume dots off the chart as well. We'll just look at volume bars, and best bid and offer price action. In fact, let me just take that off for just a minute, and we'll look at candlestick charts in here, and we'll take off the streaming price action. And let me make this a 1 minute candlestick chart, 2 minute candlestick chart. All right. Okay, so just by the candlesticks in here, yeah, I mean, you can see that this is just going back and forth in here. It is slightly going to the upside in here. Okay, this is the market structure. All right, we're going to detail out the market structure first, and then we're going to go into the order flow within the structure. Good morning, everybody. Yeah, good morning, Stephen and Stan. So in the market structure here, 9:30, everything changes basically. The volume that really picks up in here, we can start to look at some of these shifts here in the price action. Clearly, in this 2 minute period here and this 2 minute period over here, we see these shifts. Right now, candlestick analysis will give us insight that these wicks here signify buyers. All right, so that much we know. Let's just take a look at some of the analysis in here. We have a price channel, okay? And what this means here in a price channel, I hate to cut it off like that, but it matches the channel better, but truly it's more like this here if we go with the lows. Okay, so in fact, let's just go with it. What we have here is in the auction process, with this aggregated data within these periods here in a candlestick, okay, which is not giving us much insight whatsoever. Right, this is one of the downfalls of aggregated data or periodic data, no matter what the period is. Okay, if it's a time period, volume period, range period, doesn't matter, whatever it is. The problem here is we don't see the details within the candlestick, and even volume is totally separated out of the picture here and put in the subchart. and we're trying to understand and read this price structure. Now, in a structure, what this means is that it auctioned up to here, and we didn't find new buyers willing to take this higher. We rotate back in to an area where traders believe that this instrument has value. And then we see buyers come in here and kind of a little shift in here and move it higher a little bit and break the high. Okay. Well, we see sellers bring it back down into this area, and it continues on and on and on. So this is the kind of an average here, kind of value area that we're talking about. Okay, now it's on a slight diagonal, but in auction market theory, everyone understands the volume profiles, and this is showing where that value is. Okay, here everything is, this is volume within this range in here. In fact, let me actually configure this one. This is better within this range here, the CVP, which is just showing the chart range volume profile. And we can start to see where on the horizontal, on each price level in here, we have the volume is added up and it's aggregated here on the horizontal. Here it's aggregated on the vertical, right? So at least in the subchart down here. So what we have is understanding of value by the volume here in the profile, and also the volume with the price structure. Right, so within this price structure, well, this means that down in these areas here, in the auction process, that this is too low. And in the auction process, these areas are too high. Let's now add on the other elements in here and these shifted market candles in here as well. That's what we want to cover. So we want to go over 2 points in here about being too high and too low, and then also where the market shifts away. Right, so let's start adding some things on here. Okay, so actually, maybe we'll keep the candles. First, we're going to add best bid and offer. Now let's get rid of the candles. Same thing, except now we're seeing like little areas of consolidation and breakdown and little trends, etc., within all of this activity in here. But this is the main structure for this time frame. All right, so now we're going to add the volume dots on here. So the transactions within there. Okay, so we're getting deeper into this now and understanding pure price action and then the volume within the price levels on that price action. Okay, now we're getting much more insight. Okay, so when we talked about the candles, let's overlay the candles. When we talked about the candles here, well, these wicks in here, typically it means buying pressure. Okay, well, it can mean many things. In fact, it's not buying pressure necessarily. The buying pressure is actually happening up here. Okay, look at it again. In fact, can I reduce the transparency on the candles? No. All right, so we can just turn them on and turn them off. But the buying pressure is not down here. It's not here at all. We see selling pressure. Okay, so what is it down here then in these wicks down here? Well, this is trap selling, okay, or stop runs. And the buying pressure comes in up in these areas up in here. Okay, and then that shift. Remember the shift candle we talked about? Like it shifts away from that market. Happens here at 10 a.m. Okay, and the other one happened here. Now this one, it doesn't look quite as convincing. In fact, this one here, we don't see it in this candle here, but it looks very similar if we look at the volume. Okay, the volume in here compared to the volume in here in the move up. Okay, so now we're starting to understand much deeper about the buying pressure. Where is it taking place? How is it making higher highs on what type of volume? Okay, what about this lower low in here or some of these lows in here? Well, there's selling in here. We can see it. Pretty significant selling. Look at the bars down here. Look at the size and color of the dots. Red dots and market sell orders. Right, so this is further analysis, much deeper understanding, and it's all here. And you don't have to dive deep into it to understand this. It's right in front of us. You know, it's not much effort to understand that. Here, now we can start to understand what these wicks mean and what these bodies mean up in here, and maybe these small wicks on the top side. There's basically, we're just seeing more buyers at these higher areas in here, and some trap trading in here looking for the move lower. And then we see the big stop run here at 10 a.m. as you can see in the red line here. Okay, so now you can see and understand, get into the details here of what is transacting and where. And then the MBO bundle here from Bookmap is showing you stops and icebergs. Okay, we see a lot of iceberg absorption or selling in this area here as well. But nonetheless, we see price continuing to climb higher. All right, so now we understand the transactions within the price structure. Okay, any questions so far on this? Jump back here. Okay, Joe. Yeah, making more sense. Yeah, I mean, we've covered this so many times, but it's just a good review to go over and understand. Again, it's about the market structure, the transactions within that structure, and then the third element is the heat map. Okay, and then the insight we're going to get from the heat map here. Okay, so let's turn on the heat map, and then we'll turn off the candles for a moment here, and we'll probably turn them back on. Okay, so now we have understanding of who's on the other side of the trade in here. So the heat map is showing limit sell orders above the market here, and these are limit buys down here. Okay, so what happened here at 9:30? You can see that there's high liquidity, mostly still even pre-market up here. Okay, at 43.80. Also in here around this 77 level here, 78. Okay, now they actually pulled some of that liquidity before they transacted. Some of it transacted, it looks like, in here. Okay, what about the bid? How does the bid look? Where are they bidding up? Do they want to be buyers in these areas? A little bit, but not too much. And not like the sellers that we see here. So what happened here? Well, we knew that there was buying pressure. We knew that the structure in the auction is showing that there's just slightly increasing price in here in general. And we have high liquidity in here. And then this is where we can really start to read the magic in here. Okay, there was that other shift little bar in here, but we're getting even more insight from that little candle in here. Okay, and here's why. Okay, remember how we looked at this one here as being pretty important. And then we turn on the volume dots though, and we can see that actually this one was kind of important here too, but it doesn't look like it. Now we can understand though another context here. Well, there's high liquidity in here, very, very high liquidity, the most in the order book at that time, right here at 43.80, and buyers started to go after it. Pretty strong buying. They didn't trade into it or through it. Okay, so that much we know. So this candle here that you may be putting a lot of weight on, when you look at the heat map in front of you, it's right, atop this this price action. Well, this is giving us a lot of insight here. We need to have a lot of buyers not just kind of trade shy of it, they need to trade through it. And they need to trade through on large volume. And we do get that follow through here. Okay, so now when we look at a breakout, how can we reduce risk on a breakout trade? How can we gain insight from these three elements in Bookmap? All right, well, let's take a look here. All right, first let's take the candles off again, and we'll look at these three elements. All right, so all of this churn and back and forth in here, this is a lot of volume. And now we know that at 9:30 there's a lot of volume, and here it is in front of us. Okay, you can see that a lot of selling in here. Okay, a lot of buying in the in the kind of tops of these areas in here as well. Okay, now someone's going to lose in here, and we want to be prepared for this scenario of the who's going to win or who's going to lose, and what is the probability, or what is the scenario of these traders within this tight little range in here. Because when we boil it all down, yeah, some of this matters here, but it's really all of this activity in here that matters. Okay, so if we trade it up into here, and we'll go through these scenarios. If we trade it up into here, and we still have high liquidity in here like we do, we see the buying trading into it a little bit in here, and then we don't, right? And then we actually see some sellers in here. This is where sellers can trap the buyers if there is enough selling pressure. Okay, so if the scenario would be this, let me bring out the pen. The scenario would be this, that the these sellers in here, which are no, I'm sorry. Let me start again here. It is the these buyers in here, okay, at these higher highs in here, okay, all of this buying in here, okay, this is where they could really feel the pain here. If there's enough selling to start to make it go lower. Okay, and we'll have a nice retest, not only of the low of the range, we'll probably get a break, okay, especially at this hour, 9:30. All right, so that's one of the scenarios. The secondary scenario is that, well, it should be the first one actually. All of this buying in here is pressure to trade into this high liquidity here and through it. Okay, and that's the one that played out. And we don't know, right? Now, where do we know? And where do we have more confirmation in here? And this is one of the issues with a breakout trade, okay, is the risk. But once you start to see that high volume in here, and you know that the sellers are actually trapped, these guys, and these guys, and these guys here, they are the ones trapped. And we start to trade into and start to trade through on your breakout trade here, this would be the safest area to get involved. Okay, after it traded into and through and you still see more buying pressure. This is why a lot of people don't like breakout trades, because we have a lot of risk here. Are you buying too high? You know, what if we had some other scenario here where, you know, maybe in here, I'm not really sure. It doesn't really look like a good area in any of these places to get involved and have some sort of edge in here for the buy side. It would be here. That's pretty high up, and you have all this risk in here. Now, what you do have, though, to your advantage with getting in someplace around here, is that it should work immediately. Okay, and it did in this case. And you're in profit immediately. It probably didn't go one tick against you, right? But the risk is pretty big. You are risking this. Well, it depends on where you place your stop. Maybe it's here. Okay, maybe it's even here. Maybe it's that break even really quickly. So maybe it's a few points, and it's worth it to you. This is something you've back tested and you've studied, and you know that there's a lot of buying pressure in here, and you've identified the sellers in here. And once you start to see that volume take on, the aggressors take on that high liquidity and trade through it, that's where you're looking for them to carry it to a new level. All right, so let's cover that as well. So a new level, what does that mean? Okay, well, we can take a look at measured moves in here and why measured moves work as well. Okay, I'm just going to make the same width here. And then we'll take this here and we'll move it up. Okay. All right, so, and why does this work in here? Well, typically, I mean, there's many factors, and this is, we can talk about ATR, average true ranges, and why they work. Okay, now it's a guesstimate in here. But there's a concept to it. It is market breadth. There's only so much buying pressure before the market has to take a break, or selling pressure. Now, it depends on the players and depends on many things. It depends on data. If there is data coming out at that time, a lot of it's a liquidity issue as well. There might be a lot less liquidity in the market, and the same amount of players or aggressors, put it that way, can move that market much easier because of less liquidity. All right, so there's a lot of different kind of factors to understand here, and anyway, we're just going to go with the ATR as a general rule of thumb, and market breadth, and not consider some of these other factors in here at the moment. Okay, so now what we can do, if you're looking for that breakout and you see that strong buying in here, okay, you're looking to match this with liquidity up here as your potential targets. Not bad here, better even here, and this is outside of the range though. Basically, this is a little too high. Right, so anyway, you can see that liquidity right in here. Now, these are areas to consider managing your trade at that time. Right, so now we're going to talk more about the risk. We talked about entry. Okay, and again, these are not trade recommendations. This is about understanding the order flow and some trading setups or strategies within here. Okay, risk is a part of it. It has to be taken. Good morning, Deborah. This is Deborah. This is something that I want to address as well with risk, because this one worked out. Okay, there's all sorts of things that can happen in here. That maybe there's enough volume to trade into here and take these guys on the limit sell orders, but we see the move back up. We see exhaustion maybe. Or maybe just heavy selling comes in that overpowers this buying. Okay, so what looks like, the biggest volume here on the chart is actually overcome, and you can see it here in the bars as well, by heavy selling. Right, and it moves right back down to where it broke out from here at 80, and then likely will move back down into value area here, or in this chop, kind of the median area in here, whatever stat you want to go on, but understanding that this is where it traded and chopped back and forth, and that if this is outside of that range and it does not accept, then we're looking for a move back in, and then potentially to the other side here, and then maybe even a breakdown. Right, so what looked to be like a good entry in here for a breakout trade, and it's not that good of an entry for a breakout trade, as we discussed. It's too high, and there's risk involved here. Now, maybe you can take into account that this is the open, and maybe you're looking for that momentum move. That's fair enough. However, the risk is high in here, and the yeah, I'll go over the risk assessment if it moves back in, but you can have a tight stop on here. You're looking for this to work immediately, right? And then you're matching where you think it might go based on where the sellers are, and also you have other factors in here. Maybe you're a fib trader. Well, this would be 100%, right, of your fib. So that's where you look for the move, or 200%. I'm sorry. So that would be your extension, your fib extension up here. Right. So start to match these areas in here with your method of trading. Right. So anyway, worked out nicely, and maybe that's it for the day. Maybe you'd even be done for the day. Okay, if you can really get good at some of these moves and look for that to unfold. Right. So anyway, what we're talking about again is a range and a breakout trade here. Okay. Now, how do you, and this will answer Deborah's question that she's asked over the months, how do you know that well, you always seem to be buying these highs in here, and it reverses back in, and then you just get clobbered. Okay, this needs to be studied and back tested. You're looking for the relative volume in here compared to all of this in here. That's one element. Another element to look at in here is starting to understand where the trap traders are, and this will fuel that move to the upside. And that's another one. Having we've talked about traps now for a week and a half or so, and well, for years basically, but we really covered it in more detail recently. And understanding that we have that trap fuel that fire to the upside here. They're on our side, actually. We want to trade with these sellers in here because they will be the buyers in here that will help the move. All right, so now if it does not work out, then a tight stop is necessary. Okay, now where you place your stop, again, is something you're going to have to go through your own risk assessments in here. If you place your, let's suppose you got in here, okay, right here, somewhere around 82, let's say. Okay, so you got in at 82 after it traded through that liquidity. Okay, you were pretty aggressive on that entry. You're looking for it to move immediately. If it does not work, you are out. Okay, so maybe it's down here. Let me, no, I'll continue on. I'll go over the, it looks like around, 79 or so, something like that. Or it could be around the swing down here. Okay. Or it could be, your point of control down here, somewhere around what looks to be pretty close to the same here, somewhere around here. Okay. Or maybe you're looking for a much, much bigger move for the day. You're looking for this kind of figure here at 4,400, 4402 to transact. So maybe your stop is down here, okay, around 71 or so. Now that would be a much different way of looking at things compared to this short-term move up into target up here. Okay? You would not put on that kind of risk. It would not be worth it, right? So Deborah, one of the things you really need to have here in looking for breakouts is you have to have that strong volume. You have to identify the coil here and the trap traders, and you have to go through the scenarios. Okay, so what if? What if it does this? This is what you're looking for. You can stay in it and look for the move. If it doesn't work, you get out immediately and look for the next one. Okay, you take the small loss. It is 1 out of 100 or hundreds of trades that you're going to be taking, and this one didn't work out. And that has to be digested and accepted, and also put into your strategic plan of understanding that there's going to be a percentage that don't work out. You should know that percentage. That comes through your back testing. All right, so what we're looking for, again, is number one, this range in here, and we're looking for the traps. Number two is you're looking for the strong move from one side or the other, and you've gone through what it looks like. Okay, we went through initially this scenario here, okay, where we would be looking for the sellers here, okay, and then they would take this down, right? And that these buyers in here at these top areas got it wrong, and that they're going to feel the squeeze to the downside. All right, now the other scenario is that it is the opposite of that. And then we're looking for these sellers here. They got it wrong. And they're feeling the squeeze to the upside. And now we have, so number one is we're looking for that range, and we're looking for these buyers or sellers in here. And then number two, we're going through the different scenarios. What if? And we're preparing for it. Okay, we had a measured move in here. We're looking and adding liquidity in here, like in two different areas, here and then here. Okay, and the measured move is due to the market breadth and also these ranges in here, and understanding where it might go. Okay, and then we've assessed the risk as well. Okay, so now we're looking for that strong volume. We got it, and then like we'd mentioned, it's somewhere around in here, around this 82 area, after it's traded through, and you still see strong volume here. Okay, so this is a momentum move, a breakout, and a continuation. All right, so this is how you backtest it, looking for these things, and then you're looking at hundreds of instances of this, not 10, not 2, not 1, hundreds, okay, thousands. And then now you know if you have an edge or not. And then once you see this and you've gone through that scenario and you see who's on the winning side in here, you're prepared, you take the trade, and you manage it. Okay, going through the considerations in here in your trade management. All right, so just went through in detail in here a setup for a breakout, and it's not bad, not bad one in here to take a look at here. Right. So any questions on this? This is I think pretty important stuff to start your process here for building your trading plan. So it's not just, I think what a lot of traders do is they go, oh, I understand it conceptually, and then they just start taking the trade, and that is not the way to go. Understand it conceptually and break down the pieces that you're looking for and know exactly what they look like. List them out. Okay? You're looking for these elements within the setup. Do you have them? What do they look like in here? You can grade them. All right, so does it look really good? Does it look bad? And if it doesn't look good, well, then you would miss it. You would pass on it. And this would kill you to see this, right? Fear of missing out. But it's okay, because you would miss it and you just look for the next one because it didn't meet your criteria that you looked at, like hundreds of examples. Okay, Jay Trader is really good at this. He has hundreds and thousands of examples, and has done that hand back testing, right? And then once he has that understanding, he knows exactly what he does in here. And he's the first one to say, I'm cutting the trade. I'm out. And we've seen him do it several times. He'll be on tomorrow at about 10:15 usually was when he comes in, East Coast time. Divergence between stops and icebergs in here. Thomas, well, yeah, let me answer that in a minute. I just want to make sure that people understand, or if they have any questions on what we're going through in here. Understanding the concept is just the beginning here, just the beginning, and then going back and then really looking into the details in here. I mean, over a weekend, if you did this in replay mode and had many data files to take a look at, you could develop a trading plan in the weekend, and you could be trading it. Now, I would suggest that you go through at least a few weeks more, but you should have somewhere around 20, maybe 30 examples that you could develop within the weekend, and then you'll know so much more about what you're looking for, and you're only looking for that, only that. And then now when it occurs, you're prepared for it, and you know how to manage it, and you know how to trade it, and then you just take it again and again and again. All right. Anyway, I'm starting to maybe beat a dead horse, but like this is why we go through many different examples in here in Bookmap, and many different order flow phenomena and setups in here, is that to go over some of these ideas and concepts in here and then take some of those home with you. Maybe one of them resonates with you more than another. Like this breakout trade in here, there's a lot of risk. You're buying up here. Hey, but is it really though? Because this didn't go against you at all, not a tick. Right? So is your risk really high in that instance? Well, no. In realistic terms, there was no very, very low risk. Okay, but we've all been in those kind of breakout trades where all of a sudden everything stops, and it turns around and goes the other way. Okay, so again, we have other factors to take a look at in here and mark up in your analysis and spreadsheet that you are looking for in here. This was time of day as well, very important element. Okay, this is the cash open here at 9:30. Here's our breakout. Look how strong this move is. Now we know that this is strong volume here. Okay, and the market breadth, we're looking at taking some off up in here at minimum. Okay, now I would suggest, like, this would kill you to take a look at, and you just like, oh my God, I only just took, let's see, 82 up to 88. I took 6 points out of the, let's see, what is this level here? Yeah, 88. I just took 6 points out of the S&P. Instead, you know, I could have had, you know, 22 points out of the S&P, or 20 points out of the S&P. 20-point move. Pretty nice, right? I would really recommend start with just the simple one and take the profit and look for the next. And don't make this complex. If this is the setup you're looking for, because many times it will come up here, it will reverse back down, go the other way, and you keep buying into it and buying into it, and then now you've lost a lot on a really good setup. Okay, so just because you go, well, you know, it's strong volume in here. Okay, so anyway, you know, take the easy trade. Build confidence. If you're looking for this and it did it and you got out of the market, look for the next instance. That's it. As simple as that. And then, you know, maybe it doesn't present the rest of the day. You know, I mean, the funny thing is that these markets are fractal. I mean, you can trade your heart out. It did it again here. Okay, and look at this breakout here. Now look at the difference. Okay, here's our consolidation in here. Okay, it also did it here. Okay, here's our consolidation. And here's our breakout. Strong volume. Okay, into high liquidity right here, right? Strong volume through it, and then you get in maybe someplace here. Okay, let's just say right in here. You know, something like that. And that's the setup, right? Well, you know, you can look at your measured move. So, you know, something like this. And, well, it actually did it. You know, you can see that it actually did it. Your target would be like this liquidity here. Maybe this one, but just here. Okay. And it did it. Now, look at the difference, though. And let me clear all the drawings here. Look at the difference, though, between this here and this here. Look at the selling starting to come in. Okay, this is the selling over here that came in. Look at the buying up here. Look at the buying up in here. Okay, it looks very different, right? This is another thing to put into the plan. You're looking for strong, consistent buy volume all the way up. Okay, you're not looking for this selling in here. Okay, now if you manage this in here, well, your measured move would have worked out. Okay, and you're looking for your quick win and you're moving on. And that's it. Okay, so here's your measured move. Okay, let's even give it a little bit more. And there it is. Well, yeah, and there it is. Like it wouldn't even higher. Okay, but this would be a good area right in here to take your profit. Someplace up in here around this level here. Looks like about 98. All right, so and look for the next one. Build confidence. You just made another, let's see here. Would have gotten in probably here around 97 to 90, 98 or something. Okay, it's a point, but it's not much. However, you just build more confidence. And then you look for the next one. Right, so and then once you start to look at these things and become an expert in them, you look for more. There's another one in here. Hey, there's another one in here. And now this one here, look at this one. I would not be taking this one. Okay, well, first off, I don't see there's selling in here. That's okay, but it's really just a pullback and a move back up. I'm looking at the consolidation range in here. Okay, and I noted the sellers in here, and then the buying back up takes them on and trades through it, looking for the move. All right, so anyway, this may sound very rudimentary to a lot of you guys, and we just haven't covered it in a while. I wanted to go through it in more detail so that it's very different than what we're talking about during these webinars, typically reading the order flow and analysis and where price might go. Now we're really getting into the nitty-gritty here about a very precise thing you're looking for, and that's it, and then managing it, becoming an expert at it. Simple trade, simple setup, and then just doing it again and again and again. All right, and within these, now there's a couple winners in here. Great, or maybe this one here even, well, you if you went by your kind of market breadth or measured move in here, this is what you're looking for. So you would have been out, and you would have moved on. Here, this is what happens though, and this is where people unwind. And this is what we hear about trader psychology. Yeah, I'm not a big fan of the trader psychology. I'll address it in the future, but like it's very simple. This is your setup. Can you manage the trade? That's it. You don't come back and say, well, it pulled back 100%. I would have gotten knocked out here at break even, or maybe a small scratch, either a scratch trade or a small loss if I held it. But why would you hold it? You're looking for just this. Okay. And we're not going to talk about, legging out of it here, one contract, and then, legging out of another one, or letting your runner. Not now. Just this. Simple, direct. You know what you're looking for, and it's playing out. Look for the next one, and become an expert at it. And then you don't have to worry about managing it down here. A lot of us, what happens is, we like, oh yeah, it's going my way. This is great. This is just great. I'm looking for this to come up into this liquidity up in these areas up in here. Test the figure. It's got to test the figure, right? 4,400. That's where all the sellers are, and we haven't tested it in a while. We're looking for that. Well, how many times have you done that? And then in here, these sellers really pick up, and then they drop it. And then you're scrambling, maybe taking a loss down here. Maybe you're adding in down here, thinking, well, I'm just going to average in down here. I'm looking for the bounce back up. And instead, now you've added in, and it's continuing to go against you. Now you have a big loss. Okay? And you've just ruined your confidence on a good setup. Okay, so the trade management is follow your rules, and then that will take care of the psychology. Okay? And now, if your rules are different, that you do something like, yeah, I average into this, I average in here, and then I average in here, then that's something different. Okay, and that's more complex. And I'm recommending, like, in where I'm covering this example here with trading, with it's all in and it's all out, and that's it. So we've taken a lot off the table here. We don't have to worry about the trade management as much, and that's a good thing. Okay, we're just looking and building confidence in a higher probability setup, okay, that we've studied and we know works. Now, if you want to come back and fiddle with it, that's a whole different thing, and then that's a whole different study as well, right? Because maybe you found that, yeah, I usually buy it, and I usually my studies has shown that it comes back and retests many times the top of the range. Okay, great. Well, are you, and then your studies show that well, or it trades back down to the high volume node here. Let's just say it's somewhere around in here, and then you're getting involved in here, right? And then I've shown that it works majority of the time, but you've studied it and you have risk management in place. And if that is the case, that's something very different. You've only put some risk, partial risk on up here, and you've only put partial risk on here. Okay, and your studies have shown that this works well. That's something very, very different. All right. So anyway, I feel like I'm lecturing here. I just want to go over higher probability, setups and building confidence. Because once you start to build that confidence, then you really can look at other setups, or just get really, really good at your setup. And I would suggest that. And then you can look at variations in your setup, or variations in your trade management. Okay, your trade management would be like, well, I have found that if I take this here, I usually get a pullback. Okay? It doesn't go like this all the time, like down here at 10 o'clock or just before 10. You find that you get a pullback here. Okay, so you can do your measured move. Maybe you get in, you take some off, you add some back in, and you look for continuation again. Okay, now where would you get back in? Again, I would look at right in here. Now this is similar to again, like looking for there's a little bit of a structure in here, a breakdown, a move back up, and then look at the buying coming in here. Right, this is again your trapped selling in here, or your stop run. Okay, so the area to look for, again, this is something you need to look into, and this would be a very different pattern here. This would be like a flag pattern. So what you're looking for is strong move on strong volume, pullback, and a continuation. All right, so starting with this breakout trade, you can parlay that into a flag pattern trade. And you can see it's just everything is unwinding now. It all just kind of unwinds here. And this is where we have to be very, very careful. Okay, because what happens is when it starts to unwind, like, oh, well, I'm just going to do, I'm just going to turn this into a flag pattern trade now. Don't do it. They're two separate trades. Okay? Or if it's one trade, then you have to have both of these all the time, right? Your risk management, you have to be in control of that. Okay, and so you have to know you have an edge first. Then you have to be in control of your risk management. Right. So anyway, considerations for your setups and building out your setups, right? Due to what we see here in the order flow. Now we started off with the breakout setup in here. Okay, and what were the factors that we're looking for in here again? Okay, this coiled up market, looking at the buyers and sellers in here, and the potential trap, and the fuel and the breakout to the upside or downside. Okay, so we went through different scenarios too. And then we also went through trade management, entry, exit, and stops. All right. Any questions here? So let me double back here, and Thank you, Slowdown. I don't know. I think I'm hoping it's clear. Uh, I appreciate that though. I think we do have. I have been telling you guys for like over a quarter now, like over 3 months, that we have a setups. Or God, over 6 months now. We have a setups course coming, and it is going to go through these types of scenarios here in building your setup. It's going to be a different kind of educational course that we'll have coming soon. And if you like it, use it. If you don't, at least take away some of the components and elements that you're looking for in the order flow that will help your setup. Okay, so for example, Slowdown looks at these Wyckoff springs in an area of consolidation. He's looking for a stop run and below the swing and a move back up. And then he's looking for those buyers and trade to the other side of the range. Right? So now he's identified the elements in the order flow. Okay, what he's looking for, very, very specific. And that is an edge. And that's how you develop your edge. Okay, so what we're talking about in here is something kind of similar elements about at least trapped traders. Not so much a stop run, but the stop run may be taking place in here. Not waiting for the stop run here, but anticipating the stop run in here. Okay, so that is a different thing, but they're the same elements looking for. All right, so anyway, a lot of food for thought on all of that. Yeah, let me know if you have any questions and we can go through it again. We haven't even looking at the higher time frame yet. Let's do that, and then I'll wait for your questions here. My A+ setups, Thomas, like I love the breakout trade. I'm always looking for it. And then, this is the funny thing, like, and I'm looking for these kind of continuation patterns and flags. I'm looking for, I want to be on the side of the, of who's in control. All right. So, and that's what works best for me. And I can read it in the order flow here. I know that these things work in the order flow mostly. Okay? Not always, but mostly. And once I start to see that and understand that, then I can start to take some risk on it. All right. So again, that leads back to what we talk about all the time: understanding the participants in the auction. Okay? And learning from that. Your question on divergence and icebergs in here. Yeah, I mean, so yeah, look at this. It's pretty heavy iceberg selling in here. So we're up at like, let's just turn it on, the on chart. It looks like somewhere around, it's quite a few, 1,400, right? But we zoom in here, it's not going to be that, but we see a ton of iceberg buying in here, all the way up, 68, all executed, 255, eight different icebergs. Here, 13 different icebergs for almost 500. Here's our big stop run. A couple stop runs, one here, almost 600 here. And continuation on icebergs up in here. Now you can see a little bit of a flip on the icebergs, but majority was selling. Okay, and are they the ones that are getting stopped out on the continuation move up? Were they taking profit from the other day? They know they can get out in these areas. Larger players, are they hedging? We don't know what larger players are doing necessarily. We just know that these are iceberg transactions. Okay. Now, when we get that in direction of a move, that gives us a lot more insight. Okay. Now, we also know that the behavior or the traders using stop orders, okay, not all, but many, are using them as stop losses. Okay, I use it for, breakout trade all the time. Place a buy stop up here. And I'm looking for, if it can get through that liquidity and I see there's high volume, I'm placing, um, I'm looking for that high volume and looking to, have it take me into the trade. Right. So that would be a stop. And I would be in that stop data here. Okay, but I'm buying. Well, I'm buying to enter, not buying to exit. So anyway, the point is, though, most of them are stop runs and stop loss orders. And it is a sad story to see, and you can see it all the time. There's a lot of people that get caught up in these things and they have to exit. This is one of the main things that drives short-term price action. Okay, I think I've answered all the questions there. And let's see here. A measuring tool. Yeah, I hear you, S. I too want a measuring tool in here. For years, I've suggested it. I'll do it again. Okay, yeah, thanks, Dan. Dan's helping out T46. Thanks, Trader Pete. Yeah, I mean, I know you're an expert trader. It's maybe it's just good to hear again. But I want to transition. A lot of this, I mean, here's the goal. Is like we've been going over order flow for a long time. Order flow phenomena, and it's been really helpful for a lot of traders, especially in the live market. It's been really helpful, so that people can understand first off, what Bookmap is showing, and then how to read it. And what's good about doing in the live market is we can point to it and go, okay, now because of these factors, it is more likely to go this way or that way, right? And that's good, because and then if it does unfold, if you're objective at reading it and understanding the behavior, then you can look for that to unfold, and that's very helpful, and it objectifies it for people. But now we're going to I want to transition more into specific setups, and also the Bookmap Academy. This junior academy, and this build an elite trading force here. Okay, so we're going to go through. We're going to go. I don't know if you guys saw this. I was really happy to do this and want to do a lot more. Okay, on our YouTube channel. If you go to videos here, it's this one here. This was a week and a half ago, Friday, not. No, a week from last Friday, and it was the Bookmap Academy trade reviews. Okay, and open the mic up, go over other people's trades here. Are you reading the order flow correctly? Does it help? To cover or answer any questions that you may have in here, and then and open the mic. We had a coach in here, Jack. We're going to have other coaches in here, and they're going to go through. I liked what the trader saw here or there, or in the bigger picture, what they're looking for, etc. Some of it was positive. We'll go through the negatives as well. We'll go through where. We'll try to give really good feedback back in here. Whatever it is, we want to give very, very good feedback in here, and start to understand. Like, I mean, here's Stephen, who's been working really, really hard, and identifying all this order flow in here. And then the comment was, okay, this is really good. You're identifying these things, but it's too much. Like take a step back, like focus on a few things and get really good at those few things. And then you can, like a lot of this, you can kind of address later. All right, and you know, bring that back in later, like we're talking about. Maybe you're looking from a breakout to a flag pattern, and maybe you're managing it multiple times within that move. That's a great strategy. I mean, it's like two separate trades. They're all high probability. You're buying the breakout, you're getting out some, you're getting back in on the flag, and then you're getting out some again. What a great way to capture a trending day. All right. So anyway, my point is that we want to get back more into this Bookmap Academy stuff here. I'll show you the link here. So if you're interested in this, this is, if you want more information about it, it's here. Bookmap.com English, and then Academy, or bookmap.com/academy, I think takes you right there. Yeah, so here it is in Slack, and then our Discord, and then here it is in YouTube. Oh, Dan already got it. Thank you, Dan. So the transitioning from reading and identifying order flow phenomena into setups and trading, right? So and the Academy is going to be the kind of vehicle for that, right? And then these webinars, trade reviews, etc. So if you're interested in that, yeah, take a look at that Academy. Maybe that is something you have time for. If you don't, you know, we'll come up with other things. You know, we can have like maybe higher time frame, you know, swing analysis within the Academy, or maybe we'll go through you know, very specific you know, opening strategies, etc. Okay, so it's just something we're starting. All right, so let's see. Any more questions in here? Yeah, Stephen, you went over the market mechanics course over the weekend. Great to brush up on the basics. Absolutely, I do recommend that people do that. Let me show you where that is. And so Stephen went from this here into now simplifying it, and then identifying very specific elements in the order flow. And what has helped was go to here. Let me show you where to go. If you go to the More button up here, and you go to the Bookmap Learning Center, let's just open it in a new link. Here, the Bookmap Learning Center is the market mechanics course here. Okay, so we'll put this link into the chat for you as well. The market mechanics course, click on this. There's 4 webinars in here. They're about an hour long each. And just start with number 1, the basic market mechanics. Okay, because what we're going over in terms of that breakout trade, you will see on the smallest time frame, like something like this right in here. It exists. It is here. I'll show it to you now. But understanding how these markets work and how they move starts with this market mechanics course. All right, so let's just jump in here and take a look. Here's our breakout trade right here on this time frame. It does coincide with the higher time frame. Now, what do we have here? Okay, do we have all the pieces? No, I don't know yet. It's traded up into this liquidity here. We do see the transactions, but I want to see them take them on and trade through it. Did they trade through? No, they didn't. All right, so let's see now. Do sellers come back in and try to, in this time frame, do they come back down to here, 01 and 3/4, okay, or 02 here? Okay, do we see sellers coming in? Let's look for exhaustion here, meaning lack of green dots. Okay, you can see that's not happening. Okay, or do we see sellers down here now? A lot. We need to see a lot. Okay, hitting the bid here hard. Okay, it's kind of muted. It's really not giving us much information here at the moment. Okay, so then pass. I would pass on this, right? What I'm looking for is either buying up here and then a move up into 04. Just that. Okay, here's this is where we're looking for our buyers. Okay, there they are. And it pulls away. There they are. Okay, so now they got a little bit of trap traders here as well. Let's see. They should be able to bring it up to 04. Okay, and we'd look for it. There it is immediately. We're looking for it to work immediately. Again, that helps us reduce the risk. Okay, now this little, I wanted to go over this as a micro structural example, and it was working, but it's not a very good example because it's not microstructural. That's why we can see that it's the breakout on a higher time frame here. Okay, so this kind of 03 and 3/4 on up to and where did it go? Let's just measure this again and put this into our analysis. Okay, here's our range here. And this would be our measured move. Okay, now we have it. Now it doesn't always work out perfectly. Wow, stop run. Look at that massive stop run. 2,600. Yikes. It didn't do it. It came up into this liquidity up here, and that's it. It didn't come up to 44.10. And 44.10 is what we're looking for. Actually, 44.11 is what we're looking for. Okay, so one of the things that I like to do on this setup here is I like to get out in front of some of that high liquidity because it doesn't always do it. So I like to get out in front of it. So a lot of times I give up points. Okay, but that's okay. I'm okay with that because I don't have to put up with this now and take a scratch. Okay, so that's something to look at in your analysis. Even you can even look for a half measured move. Maybe that's something that you find works, and there's reasons for that as well. Okay, so you can even trade it up into half, and then look for it to reject and then come back down and take the other trade on the other side. Okay, and short it into the range. That would be more of a mean reversion there. Okay, so now anyway, a few different ways to slice and dice it. All right, let's see here. Yeah, Stephen, this is really good to hear. Keep it simple. You're putting in. I see in all these webinars tremendous efforts, and this is excellent. But now focused efforts. Clearly, you're passionate about it, and you want to learn it. Welcome to Bookmap, and we're here to help you. Like, we're giving you feedback. We'll take it further. All right, and you've got the Discord community as well. Of course, I know you've gotten a lot of good feedback from everybody in the community. And then now focus your work. Okay, just look for a few things, and then just start with that. And I would recommend not trading whatsoever, not even in sim. Okay, you before even pressing the button, know that you have a high probability trade. That's the first thing. You have to have an edge. You have to know you have an edge. It starts with that. All right, let me see. Morning, Paul. Yeah, a lot of icebergs. A lot of iceberg activity, and as they're just getting, slaughtered. But like I said, we don't know about about that iceberg activity. And a lot of times what you see, I mean, God, we've seen it so many times. Like you would think that like with all this iceberg activity here, you know, we have how many from top to bottom here? So we have what, 361 here, down to well, you know, so over 3,000, 3,200, you know, something like that, icebergs just since 10 a.m. Right? So for the last hour and 15 minutes, it's not a whole lot, but it's not, yeah, it's okay. I mean, when you start to see 10,000, 20,000, and you see like they're just getting, it looks like they're getting killed. Well, what's really going on? A lot of times you'll see an up day like that with just massive iceberg selling, and then you can look for maybe 3 down days after that. Okay, so you know, go back and this would be building another strategy in here with your icebergs, is starting to understand, recognizing, wow, a lot of icebergs. Okay, well, where do they start to really trade? Well, it's down here. Okay, so and this the top of this range in here, right? So you can even look at this area here as being a really good, our 43.80. We'll probably come back on Friday and look at this 43.80 again, or in the next few days, 43.80, maybe even, you know, later today, who knows. But this would be an area where if all of these are sellers for entry, this is where they're, you know, all in profit, all of them. And so that 43.80 is probably going to be pretty important in the future. I mean, this is where that breakout trade happened. So the market's going to be very jittery down here around this 43.80 area. Can I filter for it, Alexandra? Sure. We went through Trader Pro the other day, but we can filter this heat map in here in all sorts of ways. Yeah, the Trader Pro is the key on that one. Let me add it here. Okay, let's use the ES. Now, when you use this this tool here as part of the MBO bundle, okay, we added it for free. I don't know how long ago, maybe less than a year ago. But we have many different algos to take a look at in here as well. In fact, we're going to get rid of this one. We're going to add a new one here. And then we can look at, this one is really, some of these that get, there's new algos I actually have to go through and kind of brief myself on so I can bring it to you guys, but we're just coming out with them. And then this one here on the order change is it gets really interesting. The change in here. So if we click on change, actually now we have the option for not changed. So that's what I'm going to cover here. Not changed by price or size, or price individually or size individually. Let's just click on this one here, price or size. And what does this mean here? We're going to click play. When we click play, this is going to open up this symbol here. Okay, it's going to be a new symbol, a duplicate symbol, and it'll be a new tab over here. So I click on play, and there it is there. See? It's not supported by stops and icebergs. Okay, yeah. So it's just telling me that stops and icebergs do not work in it because I have filtered them. Okay, it is MBO data, but I have filtered them. That's all it's telling me. And here we go. So it's building this new map here, and it is showing orders in here for the ES that did not change in size or price. So this would be your significant liquidity at 15. Okay, this would be your higher time frame, bigger, larger players in here. Okay, it's a very different heat map. This is an excellent tool. You guys should play around with it and build strategies out of this in here as well. Looking for that very serious liquidity that's staying in the order book, like here at 10, okay, down here at 4 and at 5. They were staying in the order book for quite a while. Okay, so you can identify these players here. This is where they want to trade. Does that answer your question, Alexandra? Alois, you should have access to all of this. You update your TraderMap Pro to the latest version. I don't even have the latest version right now. I'm going to be briefed on this soon, and understand some of these new algos in here. I'm using version 2.6 here, as you can see. I do not see that it's out of date. So I think this is the latest one. All right, so it should, with the add-ons manager in here, it'll tell you that you're updated or not, immediately. Okay, so if we go to the add-ons manager here, level 1, level 0 is for connection, Bookmap Connect. Level 2 is the add-ons, and then you can see in here the versions. If you do not have the latest version, you'll be notified as you start Bookmap, okay, or even during. So here's my TraderMap Pro 2.6. I believe that is up to date. Yeah, I mean, you cannot trade off of this either. Note that it's not possible to trade off of this, I believe. Looks like I actually can. Yeah, I'm just not even going to try here. I'm just going to say you cannot trade off of this. It is kind of a synthetic instrument, basically. All right. Okay, we created it here, and you can see it right here because it says ES CME, and this is right here. This is the what is it? Order flow or orders change filter. That's OCF, and then it's at TM, which means TraderMap. Okay, TraderMap.pro. Okay, whereas we came from here, ESZ .cme from at Rhythmic. So this is Rhythmic data. This is also Rhythmic data here, but it's a totally synthetic instrument we created. All right, so you cannot trade off of synthetic instruments. All right, and you can see look at the filtering in here. In fact, let's do this. I will take this one out. And I will put it here. Okay, it's not what I want. There, that's what I want to do. Okay. So this one here is the ES on the right-hand side, right? ES. Oh, I'm sorry. This is the TraderMap Pro filter, and then this is the ES Rhythmic here. Okay. Now, just to show apples to apples here, what we can do is we come up to the sync tool. We rarely use this tool or demo this tool. It is excellent, to sync these tools. Now, I clicked on it here, so this is the master chart. But if I zoom in here, it only works on horizontal zoom. The vertical zoom will not work, but the horizontal works. Okay, and we can look at and kind of compare liquidity in here, right? So how does the ES look to the TraderMap Pro version? Well, look at see all this in here. See all this area in here? You do not see that here. Okay, because this is order flow that is changing. This here is showing order flow that does not change by time or by price. Okay, great tool. And this is what we are bringing. We innovate here at Bookmap, and it's the innovations that are now for you to go and study and build an edge out of it. Okay, so it's not just a new whiz bang indicator. It is to go to provide an edge. Does it provide an edge? Does it look at the markets in a different way? Does it help you? Maybe this doesn't resonate with you. I think Trader Pete, for example, was a big fan of this. If I correct me if I'm wrong, and that's fantastic. He's using this heavily, I believe, and I know he was when it first came out. It's only gotten better. We have added the historical data. We also added all these new algorithms in there. This one here with the unchanged is really interesting. I've seen some really good stuff from it, but I haven't really built it out into an edge quite yet. I wanted to trade only off of this one, to be honest. Yeah, CMJ. So you've been trading around with it. Yeah, we covered it yesterday as well. The Trader Map Pro looking at really high levels of liquidity, and only filtering for those, and the spread changes in there. It will only the spread will only be like, let's suppose we're filtering for 100. Well, it would be up here. You would only see this would be your best offer up here, and your best bid would actually be right here at 09. Okay, so it'd be dark in here. There'd be no liquidity in here because you filtered it all out. And you can do that with the market by order data. Yeah, and we noted how you can see the behavior of traders. What they're providing liquidity at these big edges, here or here, in a range, and then what they'll do is like from here, like you'll see the liquidity shoot up into this little area up here very quickly. They get filled a little bit and they pull it away, and then maybe they get filled on the offer a little bit and pull it away. So their behavior is like constantly adding into their, or averaging into their trades, or maybe they're hedging, arbitraging, who knows on what time frames, etc. But the behavior is there. There's no question about that. Yeah, you like it for the active algos, 7. Okay. Yeah, great. Okay, so you just got long on a pullback. Let's take a look, Stephen. Oops. Okay, I'm having issues with my monitor all of a sudden. Hold on. You guys see that? Not. It's not showing on my stream. In OBS. Do you guys see that? No. There's no problem here? Okay. That's really weird. Okay, well, if you don't see it, then you on YouTube, you guys see that? I'm having like really odd fluctuations in my monitor. Cloud notes, Paul, I'll have some new news about the cloud notes as well. Okay, great. You guys are seeing my chart, no problem. Okay, this is really weird. Anyway, the Stephen, you just got long. Boy, I can't even read this right now. Okay, let's just take it this way, Stephen. Why did you get long? Or yeah, you say you got long on the pullback right now. Okay, why? So talk about, I'm going to be your trader psychologist. So like you tell me your reasoning. Okay, it's not, doesn't matter what I think. Um, in fact, that's really dangerous. Doesn't matter. Uh, what matters is you. This is something that you looked at, and that you uh, know that you have an edge. You studied it. Uh, you have your reasons for it. What reasons do you have for getting long here? You tell me. Oh, okay. It was a response to slowdown earlier. Okay, you're flat. Okay. Well, then I would no. I'm sorry, my misinterpretation there. So, but have your reasoning. Okay, slow down. Yeah, it might be looking at some sort of spring in here, right? And then you can see the buying coming on the other side here. Not bad, not bad. So looking for the move to the other side of the range, take some off, and he's looking for continuation. Yeah. Well, Floyd, this is what I'm. This is that is a kind of a. There's a couple of psychological or a couple of issues with being a chaser. Fear of missing out, of course. However, you maybe you don't quite know your setup um, as well, like because you're adding way too much risk by getting in at a worse price. Typically, it depends. Like I said, a lot of times, like God, what is it? I saw uh, forget the trader's name, but this woman, really energetic, outgoing woman who traded in the pits, I think, many years ago. She's at the money shows and all this kind of, all these different shows. She's been doing it for 20 years or so. But she had said when we see massive, momentum, just get in. Like, she'll just buy at a higher price and she doesn't care. It's just worth it. Now that's her, right? And that's what her studies told her to do. So in that case, it's like, are you missing it? Yeah, you have a fear of missing it. So there's an example to counter the fear of missing out. But you better make sure though, and she had make no Susie Orman. No, it wasn't Susie Orman. She's great. I mean, like really funny as well. I forget her name, but anyway, she was just saying like, well, with that kind of momentum behind it, you're just gonna miss out. Like you can't wait for a pullback, right? It's too much momentum, and it's just better to just get in. Yeah, that's it. Linda Bradford Rasky. That's it. And that's what she had found. So that's very different than chasing. That's not chasing. She has studied it, and it showed that it is worth it to get in. All right, so that's a big distinction, right? And then what it really does is it puts you on the Floyd. If you chase it and you get in, it puts you on the defensive immediately. You're like, oh God, why did I get in? Like now you got in at a price that maybe you're not comfortable with, and it is better to just miss it. Just miss the trade. Like look for the next one, get better at getting it and taking it. And then if that's the setup you're looking for, then that's what you look for. That's your trade, and that's what you're um, stocking basically. So anyway, I imagine slowdown has if he took that there uh, uh, that long from the spring, he's out some of it already. And again, there's reasons for that. and he can detail. He always details out exactly what he's looking for. Okay, and I'm sure I can just see, I can even see the graphic, the little target up above, somewhere around 15 or 14 or so, with an arrow in the middle of it. All right, guys. Well, thanks everybody for coming. So if you like this, please hit the like button. That really helps us out. And I got to go. A good session. I hope you liked it. Like I said, we're going to have more materials for you. We're going to build out this academy more for you guys, and have a really great community and great plan here for you guys. Yeah, I was wondering, slow down, if you took it or not. It wasn't quite didn't look quite like your setup to me, but maybe a little too much risk on the move down. That's another thing, Slowdown. I would like to kind of get your feedback on how many points you're looking for that spring, on that break. We've covered it for a long time, like in the S&P. Obviously, different markets, it's going to be different. But if it's like 2 to 3 S&P points, especially if it's like 2, that's a pretty nice little false breakdown and a move back above. When it gets to 3, it's kind of on the edge there. When it's 4 and 5, then it usually is continuation. And that's what we've found. And boy, I don't have metrics on that, guys, but that's what we've seen over the years. And it depends on the environment, as well as the high of the day, low of the day, etc. But it's just a kind of a general number. Thanks, Viper. We need 51 people in here and 55 likes. But yeah, that helps us for sure, and also gives us feedback on what content you liked and didn't like, and we can do more of the same. Yeah. All right. Thanks, guys. Thanks for coming, everybody. Tom B is back. Go to that webinar. Doug, options with Doug later. Algo Boys after that. Go to the Learning Center. We have our calendar. You can check out and who's presenting, or you'll see it in our Discord. Just go to our Discord and see the events on the top of the Discord column on the left. Okay, yeah, thanks everybody, and we'll catch up with you on Friday then with the All Markets webinar. Tomorrow's Joseph J Trader, and then we have Scott Pulcini on Thursday. Thank you, everybody. Have a good day. Bye-bye.